So this is another conceptual video that I'm doing for chapter 2. Basically, here in this chapter, you're learning debit and credit entries, and these are generally called journal entries. So whenever in the question it says prepare journal entries, basically that means that you have to show debit and credits. And so before I do that, I'm going to explain you. So in order to remember this, you got to remember this word called dealer. The word dealer, right? That will help you to remember what is debit and credit and what it means for what kind of an asset or liability or equity or any other account. So D stands for dividends. Okay, so I'm gonna write that first, dividends. E for expenses. A for assets. L for liabilities. E for equity. And R for revenues. Okay, so these 1, 2, 3, 4, 5, 6 accounts uh, is we're gonna talk about. So this word dealer, if you put a line in there, so this first three and the other three accounts have something different when it comes to debit and credit journal entries. Okay, so now I'm gonna first talk about the left side and then the right side. Okay, so we'll talk um, in steps. So first, the left side, basically we're talking if dividends increase, you're gonna call it debit. It's just a word that you have to remember, that whenever dividends increase, you have to debit it. Whenever dividends decrease, you have to credit it. Okay, so credit, and this was debit. I'm just gonna write it um, completely. And the same thing is for the rest of these two accounts. I'm gonna let's use for expenses. The same thing. They when expenses increase, you're gonna debit it. When expenses decrease, you will credit it. Okay. Um, for assets, same thing. When assets increase, you're going to debit it. When assets decrease, you will credit it. Okay, so that explains the first three. The last three, it works the opposite way. Okay, so let's say if I start with the first account, liabilities. So when liabilities increase, you're going to credit it. Okay, and when liabilities decrease, you will debit it. Okay, so I'm gonna write fully. So you're gonna debit it. So the next one was equity account, and then the revenues exactly the same way. Equity, when equity increases, you're gonna credit it, and when equities decrease, you're gonna debit it. The same thing is for revenues. When revenues increase, you're gonna credit it. When revenues decrease, you're gonna debit it. So this is something you gotta memorize, and dealer helps you to remember that for your exam purpose. And hopefully that will once you remember that, then I'm gonna then comes for each transaction, we will see how this transaction is impacting, whether it's going to impacting assets, liabilities, equity, expenses, revenues, or dividends, right? So we have this series of accounts. When I was telling you in the chapter number 1 about this equation, so we have three pieces of that. Assets is equal to liability. So I'm drawing a circle. Okay, I'm going to use a different color or use a green color. So remember that asset side I showed you in chapter number 1 in the conceptual, and this is the liabilities, and this is the equity side. So all of this is right here. Okay, and then we had then I explained to you the earnings process. So the earnings process is here as well. So let's take a different color for that. So earnings process is shown by revenues and expenses right here. So now we have them, and you can see they are under different left side and right side. And then we had one thing left, which is the dividends, which is part of the common stock account, shareholders equity account, remember? And I explained you that account when we were doing statement of retained earnings in chapter 1. So all these accounts, when they increase, decrease, there's a debit and a credit separately for them, okay? And that we will learn in the next section.